Alright, good morning. Thank you guys so much for tuning in to today's live stream. It is July 9th, 2025. And to begin today's live stream, I do want to take a look at the economic calendar here. And so today we don't really have much volatile news. Final wholesale inventories, crude oil inventories, the 10-year bond auction, FOMC meeting minutes. I think the two that I'm really watching for today is the 10-year bond auction and the FOMC minutes. FOMC meeting minutes isn't the meeting where the Feds are going to decide to change or hold the federal fund rates steady. I'm not too sure what they're going to talk about here, but I don't assume that there's going to be anything that's going to be like different from their previous actual FOMC meeting, where they decided to hold rates steady and take a wait and see approach. And so I think with that, we can begin our technicals here. So nothing really much to, consider coming into today. And I guess coming into the technicals here for today. So I do want to mention that So coming into today, the weekly candle here is not accurate. This isn't the accurate weekly candle. Where we closed here last week was here, right? And coming into this week, I didn't necessarily have a bias. So I didn't have a bias here on the weekly time frame, and so I was pretty neutral. I was going to not utilize the weekly time frame and use, the daily time frame and the intraday time frames coming into this week. And so today, this was the daily candle here from yesterday. And with the way that we closed here on this daily candle on Tuesday's trading, I am also going to consider to take a kind of like a wait and see, right? I am not completely sure if we will take out the daily low or the daily high based on the daily closure, right? The daily power of 3 doesn't really suggest to me either the daily high or the daily low. And so I know that coming into today, I can't utilize the weekly and the daily. And we also took out daily high too. And so that really makes it even more of a reason for why I shouldn't be using these two time frames, the weekly and the daily. So ideally, coming into today, my best bet is to utilize the intraday time frames. And so what I mean by that is, depending on how we close here on this 4-hour candle, and depending on how we close here on this 8-hour candle, that will give me a morning objective, right? If you can apply these same open, high, low, close, like these concepts to every single time frame, you'll be presented with a lot more opportunities, right? Like, if you can take a look at this monthly candle here, and tell me that, hey, we should take out the monthly high, right? Because the monthly candle here, previous monthly candle closed bullish. It shows me that we should take out the monthly high before we take out the monthly low. And that's enough information for me to have an understanding of where prices wants to go. There are more confluences that I require for me to actually press the button, but that gives me a general idea if whether I should be bullish or bearish, right? And apply that same concept, but to the 4 hour and the 8 hour, the hourly time frame, the 15-minute time frame. Every single time frame is fractal, meaning you can apply these concepts to every single time frame. And yeah, so if this 4 hour candle were to close right now, my best bet would be that, hey, we should most likely take out this 4 hour high slash 8 hour high, right? That would be my bias coming into today. And so, or not, I wouldn't say coming into today, but coming into the morning session today. And yeah, so the 4 hour candle, 8 hour candle, those two candles here are going to close within about 20 minutes or so. So I'm not going to force a idea here just yet on the two time frames. I would wait and see how we close first. But it does appear to me that we should most likely take out the 4 hour high slash 8 hour high. Right now, there is a form of SMT. So NQ, we have taken out this high right here. So take a look at Monday, July 7th, 6 a.m. candle, 6 a.m. 4 hour candle. Notice how high on that candle, right? So here, coming into the morning session on NQ, we have taken out that high, meaning we have traded past that high, right? But take a look at ES. ES, we have failed. We haven't taken out that swing high yet. And so that shows me that there's a SMT divergence between the two indices. If we were to reverse, this would be a logical place for us to do so, right? Because there is SMT. If there wasn't SMT, then I wouldn't be as eager to see or like to respect a reversal, right? Because there's an SMT right now, if we were to reverse, then it would make sense for us to do so, and I wouldn't be so opposed to the idea. So just, I think my best approach, like I said, coming into today, utilize the intraday time frames. I'm not going to take a look at the daily and the weekly, as their objectives are unclear or has already been completed. And yeah, so that's essentially what I have coming into the morning session today. There was a trade that I want to go over here with you guys that I did not take, but I noticed it after it happened. And so the setup that I want to show you guys is right here. So let's take a look at the 50. Actually, let's start off with the hourly time frame. This is the hourly candle here. This is the most recent hourly candle that closed, right? And this hourly candle here, if we were to apply the same concepts that I was just doing just now, right? Where the way that we closed, you can kind of come up with an assumption, right? So, with the way that we closed here on this specific hourly candle, I can come up with the idea that we should take out the hourly high, right? it is most likely that prices will open, manipulate lower, and expand higher to attack the hourly high. That is my bias, right? That gives me a general idea of where I want to see prices, what I want to see prices do, because of the way that we closed here on the hourly candle. A better or a more objective way to look at this is the closure of the candle. Is it closer to the low, or is it closer to the high? So here in this case, the blue line is where we closed. The green line is the high, and the red line is the low. To objectively look at this, right, you want to ask yourself, is the blue line closer to the green line or the red line? In this case, the blue line, the candle's closure, is closer to the green line, meaning the next hourly candle should take out the hourly high. We should take out that green line. That gives me a general idea of where I want to see prices, right? And so with this bullish bias for the next hour, I want to align myself with this order flow. And so going from the hourly time frame, going from the bullish hourly order flow, I go into the 30-minute and the 15-minute, and I notice, hey, this 15-minute candle, let's take a look at that 15-minute candle. So this 15-minute candle here and this 30-minute candle, the most recent 15-minute and 30-minute candle suggests the idea that we should take out the 15-minute high / 30-minute high. Notice how this 15-minute high is the same high as the 30-minute high. That means we should complete the 30-minute objective within the next 15 minutes. That idea is called scope. Scope allows you to understand when a objective should be completed, and because the fact that the 15-minute high is the same high as the 30-minute high, you can come up with the assumption that we should take out the 30-minute objective within the next 15 minutes. And let's go back to the hourly time frame. This is the hourly high here, which is that purplish line. So the purple line is the hourly high, which is the hourly objective, right? Which is a bullish bias. The green line is the 15-minute / 30-minute high, which is the 15-minute / 30-minute objective. And notice how the purple line and the green line are two different highs, but they support one another. Both the 15-minute and the 30-minute support the idea of bullish bias based off of the hourly time frame. And so that gives me a higher time frame objective, which is the hourly high, and that gives me a model, a way for me to align myself with the order flow, which is the 15-minute time frame / 30-minute time frame. And so the idea based off of all of this information is that we should expand. Once we open up here on the next 15-minute candle, we should open, maybe manipulate lower, and expand towards the 15-minute high. After we take out the 15-minute high, we should continue to expand towards the hourly high, right? So that's essentially the framework here. And treat the higher time frame objective, and specifically in this trade, the hourly high, as a big magnet, and the model, the 15-minute high, as another magnet, but it's not as large as the hourly magnet. That's kind of the general idea of what the higher time frame objective is in the model. So now that I have a model and a higher time frame objective, I am going to need an entry pattern. My entry pattern of choice here to support the idea of higher prices comes from the 2-minute time frame. And so there's this 2-minute fair value gap here. And this 2-minute fair value gap supports the idea of higher prices. We should, if we do get the opportunity to rebalance into the inefficiency, and this rebalancing part here is essentially prices doing the open and the manipulation lower. That right there is how a candle gets created, right? So we open, we manipulate lower. This manipulation is how we usually get into a trade. This part right here is on the lower time frames is us rebalancing into an inefficiency that should be respected to push us higher. So imagine that there's like a fair value gap here and we manipulate lower to expand higher. So the open, low, high, the closure I don't care about. All I care about is if we completed the objective. That's all I care about. And so this specific setup here, this 2-minute fair value gap is the entry pattern. It supports the idea of higher prices. It's a BISI, and it's also should be treated as a fair value gap that gets rebalanced. The fact that I know there's one reason why I know that this fair value gap could be rebalanced, right? Meaning it could be traded back into. It's because the candles, this closing price right here is lower than the previous candle's high. And this is maybe for a different subject, but a fair value gap is created with 3 candles. There's one candle here. There's another candle right here. And there's another candle right there. So notice how there's 3 lines, right? 3 blue lines. It's all pointing towards different candles. But those 3 candles create the fair value gap. And the second candle, I'll make that a pink line. Pay attention to the second candle's high, which I'm going to draw your attention towards to be a orange line. Notice the third candle's closing price, which I'll make a red line, or actually which I'll make a green line. Notice how the candle's closing price, on the third candle's closing price, it's below the second candle's high, which is that orange line. This means that the fair value gap that I'm entering off of could be treated as an entry pattern. It shouldn't be treated as a breakaway gap. If it was a breakaway gap, then the closing price on the third candle should be above the second candle's high, which it's not, right? And so let's take a look at the 1-minute time frame to see how we trade here. So this is where we open. We open right here, where that blue, or let me make it a more predominant color. And so we open up here at 12 o'clock, and the opening price is 22,905.75. We had that opportunity to get rebalanced into the inefficiency, and let's see if we continue to expand towards the 15-minute high, which is right here, and the hourly high, which is right here. So the hourly high is a blue line. The 15-minute high is going to be a dark green line. And so let's take a look. We already rebalanced into the inefficiency, and we know that we should respect this inefficiency to take out the 50-minute high and expand higher towards the hourly high. And what do? We kind of just like go back and forth. But yeah, this is where we take out that 50-minute high. Right here is when we take out the 50-minute high. At 12:06, we expand higher towards the 15-minute high. I didn't get stopped out yet. We take out the 15-minute high, and we went right where the hourly high is. So this little tick right here, it is right here. And notice it's the same line. So the hourly high also got taken. And so after, and this is more stop loss management, but after we take out the 50-minute high, I move my stops to break even, and I don't care where we go from there. That's all I care about, is the model and the objective, right? The model and the higher time frame objective, to rephrase that. But that's essentially the setup that I noticed yesterday. I wasn't able to take it because I wasn't present in front of the charts, but after reviewing, that was the setup. All right, and so that basically wraps it up for the review there. Hopefully that gave you guys a good idea of how I view prices, and yeah, and so just noticing here that we are pretty close to the weekly high. Notice how here on ES we have failed to take out, this swing high here, and we are not as close to previous week's high as NQ. So if we do end up reversing, that is completely fine because of the presence of SMT. If there was no SMT, then I wouldn't be so, like I stated before, I wouldn't be so I wouldn't accept the idea that we could reverse. But because there is SMT, it's easier for me to accept the fact that we could reverse. Notice how I'm using those words such as could, possible, possibly, most likely. I'm never saying we should take out this. You have to understand that you're playing a game of probability here. Understand the probability. If you can give yourself an edge to give you an 51% chance over just a regular 50%, then you have a higher probability. That's just understand the verbiage understand the way that I'm phrasing my words here. It's never a definite outcome. It's a more possible, a more probable outcome. So I'm just, like I stated before, just watching and paying really close attention to how we close here on the 4-hour candle and the 8-hour candle. I'm also watching really closely of the SMT divergence, the SMT here between NQ and ES. We have about 3 minutes left until we close on NQ's 4-hour candle and 8-hour candle. Just being extremely patient, not going to force anything. How are you guys this mornings, by the way? Hopefully it's going pretty good so far. I was able to go on a light little bike ride and get the body moving, get the blood pumping. I think that should become part of my routine, to be honest. is to go on those bike rides and kind of like really get the blood flowing. I can't tell how many views there are, but I'm really watching myself watch. I'm really watching myself watch myself. About 1 minute left until the candle's closure. So because of that, let's kind of revisit the 4-hour candle and the 8-hour candle. And so here, this is the 4-hour candle. This is the 8-hour candle. Let's apply the same concept as I've been doing so far into the live stream. With the way that we are closing here on this 4-hour candle and this 8-hour candle, the easiest assumption to make is that we should take out the 4-hour high and the 8-hour high. So notice how the 4-hour high and the 8-hour high, they're the same highs. That gives me this piece of information of, hey, we should complete this 8-hour objective within the next 4 hours. To dig a little bit deeper, the hourly high is the same high as the 4-hour high and the 8-hour high. And so I can scope into a lower time frame and get more understanding of when we should complete the objective. And the hourly objective, the hourly high, it's the same high as the 4-hour high and the 8-hour high. So that means we should complete the 8-hour objective within the next hour. Same thing here on the 15-minute time frame too. Here's the open. And so it looks like I stated before, it's a bullish closure, and we just took out the 4-hour high / 8-hour high within the next hourly candle, or within the next hour. And yeah, so we also took out previous week's high here as well. And yeah, so that, I mean, prices just completed my morning objective, right? We just took out the 4-hour high and the 8-hour high, which I was anticipating, and we did that so within the hour. And let's take a look at the 15-minute time frame too. Notice 15-minute high, same high as the 30-minute high, same high as the hourly high, same high as the 4-hour high. And so you can apply this idea of scope. The 8-hour objective, which is for us to take out the 8-hour high, should be completed within the next 15 minutes, because the 15-minute high, the 15-minute candle, has the same high as the 8-hour high. That is how you know when an objective should be completed. Let's take a look here on NQ, or I'm sorry, on ES, and see if we have taken out previous week's high yet. We have failed to take out previous week's high here on ES. I don't know if we are going to get that continued expansion towards the previous week's high, but just keep in mind that there is a SMT divergence right now, and because of the SMT divergence, this gives prices the possibility of reversing. It's higher chances of a reversal now that we do have a SMT divergence. So just keep that in mind and watch very closely of how we trade now, right? I'm not going to force anything here anymore. We're continuing to make new all-time highs, And yeah, we already taken out the morning objective for me, which was the 8-hour high and the 4-hour high. All right. So to really end things off here, I do want to go over some of the pros and cons that I can carry over coming into this week from previous week. I'll make this a little bit faster, but the first thing that I do want to cover and mention is to take consistent trades, consistent setups. How do I do so? It's to have in every single one of my setups, I'm going to have a higher time frame objective, I'm going to have a model, and I'm going to have a fair value gap. The trade that I just broke down with you guys, it had those three components. And if I were to compare that trade that that trade that I analyzed with you guys just recently with a trade that I actually took here on Monday, they will have the same concepts. They have the same structure. It's just different time and different price levels, but they're fractal. It is fractal. And so I just want to emphasize the idea of consistent setups. There are three things that I look for. If one of those things are not met, I am not going to force a setup. Second, pay close attention to SMT. Like I stated with you guys, if there is a lack of SMT, that indicates that there's a potential continuation. If there is SMT, then there is a potential reversal. Keep that too in mind. There are two situations, right? Just watch very closely. So SMT is important. It shows you when there's been manipulation and it prevents you from taking any unnecessary losses, and it can also benefit you whenever you are in a setup. That's essentially the second point. The third is to utilize every single time frame. Time is fractal, right? Notice how I was watching every single time frame, the daily, the intraday time frames, such as the 4-hour and the 8-hour. I'm also noting the hourly time frame and the 15-minute time frame. I have a clear understanding of where prices wants to go for that specific time frame, and I'm applying the same concepts I'm applying the same concepts to different time frames because of my understanding that price is fractal. Last but not least is to be patient. I'm not forcing anything to happen, right? I'm always looking for three things. If those three things are not met, I'm not going to force anything. So to wrap things up for the pros and cons, the first is to be consistent. Require those three components that you always look for, that I always look for: higher time frame objective, a model, and a entry pattern. Second, watch closely between the relationship of NQ and ES. SMT shows you where there has been manipulation. Third, you have to understand that we are at all-time highs, so you don't want to force a bias here on the higher time frame objective, meaning I'm not going to force an idea on the weekly time frame and the monthly time frame, either because the objective has been completed or because it's unclear of how we close. Fourth, pay close attention to my entry pattern. Like I showed you guys in the breakdown in the analysis of the trade from yesterday, or the possible trade from yesterday, you want to answer two questions whenever taking a look at the fair value gap. You want to see, should this fair value gap, could it be treated as the entry pattern, or should it be treated as a breakaway gap? Second, are we respecting the consequent encroachment of the fair value gap while if we are in a trade, right? And the last thing is to track my 10K journey, and by doing By doing so, it just really records how I'm processing things and recording my journey throughout this. I think it's pretty fun, but yeah. So the last thing here for today is I want to briefly go over the setup that I took here on Monday. And so coming into Monday, or I guess coming into this trade here that I took, the idea of this trade was based off of the higher time frame objective was essentially this dueling range here. So from this swing high, from this 15-minute swing high to this 15-minute swing low, I drew up a discount to premium level, right? This blue line here that goes across the dueling range, it is the equilibrium point. It is the halfway point between this high and this swing low. And that shows me the difference, or that's a visual representation of the separator between premium and discount, right? The idea is sellers, they're going to want to sell in premium. Buyers, they're going to want to buy it in discount. And it appears to me that we haven't had the opportunity, we haven't had that chance yet for us to do so, to trade into premium. And prices are going to want to trade into premium, right? And how do I align myself with this idea is, let's take a look at the 30-minute time frame and the 50-minute time frame. 30-minute and 50-minute support the idea of higher prices. It supports the idea of us taking out the 50-minute high / 30-minute high to expand higher towards the premium. Like I stated before, higher time frame objective here for this trade is for us to trade into the premium. Notice how I align myself with that. My model is based off of the 30-minute candle. However, because the 50-minute high is the same high as the 30-minute high, that allows me to scope into the 50-minute time frame. Like I stated before in the previous example, because the 50-minute high is the same high as the 30-minute high, I can assume that we should complete the 30-minute objective within the next 30 minutes. Or I'm sorry, we should complete the 30-minute objective within the next 50 minutes. And so that's the idea here. So going from the 15-minute time frame, now that I have a higher time frame objective and a model, I have to find an entry pattern. My entry pattern of choice is this 1 minute fair value gap. And so we open up here at 11:30, right where that line is, right there. And notice how this 1 minute fair value gap supports the idea of higher prices. So we should rebalance into this 1 minute fair value gap, respect it to continue higher. And so let's take a look at what happens. We rebalance into the inefficiency. That's where I get the opportunity to take my entry. And so we expand higher. So we respect the inefficiency, expand higher towards the 15-minute high and the 30-minute high. And I didn't really show you guys a clear difference, but the 30-minute / 15-minute high is different than the premium level. We're very close to it, that blue line right there. But we haven't taken it out yet at the 15-minute high. So the idea is, after we take out the 15-minute high, we should continue to expand higher into the premium level of the 15-minute dealing range. And that's essentially the technicals. Very simple approach, right? And here's the risk to rewards here. So it was a 1-to-1 from this stop loss to the target here. It was a 101. Total risk was 102. Total reward was 102. The amount of ticks that I was able to, I guess, snatch was 34. The number of contracts was 6. My net profit, the total, the amount I made was 63. Simply because I took some off at the 15-minute high, moving after I moved my stops to break even, and then yeah, so with fees included too. It doesn't really equal up to 102, but it's okay. Yeah. Oh yeah, cái sắp sửa bị lấy bây giờ ấy. Yeah. Yeah. And so, yeah, bye man. And so the account total now is 10,152 around there. We're up. I'm not even gonna say up or down. I'm just gonna do my thing. And bye man. That's essentially the live stream. I was able to show you guys examples, 2 examples of how I view prices, right? Hopefully that's, increasing your knowledge of how I view prices. And that's going to wrap it up for me today. Thank you guys so much for tuning in. And until next time, be safe.